Happiness is not the mere possession of money. It lies in the joy of achievement, in the thrill of creative effort. Franklin D. Roosevelt. Seems like a surprising quote from one of our most socialist presidents, but it is a good quote nonetheless. It lies in the joy of achievement, in the thrill of the creative effort to earn that money. And folks, that's the thrill that I have every day bringing you chartingwealth.com's daily reviews and now the comprehensive review and forecast we do on Fridays for the market opening on Monday, where we review what happened over this last week and what we see occurring potentially with the trend over the next week. And I've been working hard on the Advanced Accelerated Market Mastery course. Starts this weekend. Want to welcome all of those students. Probably not going to do this kind of course again. It's an intensive 3-month course, 3 parts, and I'm excited about it. We're starting this weekend with the intensive charting course. That'll be for a month, then options for a month, and then building your own virtual personal wealth fund, which is the end result of everything that we do here in our training, is to help you be able to create and manage your own virtual personal wealth fund. It's like a little hedge fund that you manage. Now, let's jump into these charts. Thank you again for everyone who's purchased the book, both nationally and internationally over the last week. We've been sending out a lot of those. Links are in your show notes. And we appreciate all the Patreon supporters. Great Patreon call earlier this month. If you're a Patreon member, look in your emails from us. We sent you a recording if you weren't able to join us live. Now, let's talk about these charts. We see stocks up for the day, bonds and gold down. How did we end the week with the S&P 500? Well, we have a green up candle. As far as the week goes, no wick on the bottom. Open green, that's an open box green candle with a wick on the top. Now, it is below the original trend, but we see the price percent oscillator kicking up, derivative oscillator losing upward momentum. Remember, that's our leading indicator, shows us overbought and oversold conditions. Just can't cross over, can we? Going up, it just isn't happening yet. See how it's stalled here? And again, this latest candle represents Thursday and Friday, and we can see where things peaked with that 2-day candle on Monday and then slowed down on Tuesday, Wednesday, and then, again, about the same on Thursday, Friday. We have a green open box spinning top, indecision tending up, and not enough energy to have a 2-day recross. If we backtrack here, we can see where the market peaked back on Monday, Friday, Monday, from early June. So again, interesting what we've seen happen. Now, these are typically the summer doldrums where not much goes on. Well, it's crazy. We're still in the COVID mess and all the other stuff that's going on. So we'll just continue to watch, see what there is to see. Are we going to have the markets booming up this next week with a crossover, a 2-day recross as we call it, going up? Maybe. If so, might give you a chance to jump into an up move, an up practice trade on the S&P 500. Maybe it'll bounce off and head down and pull everything over, and we'll see the bull trap being sprung. Don't know. We just know that we see a big sideways slide there. Now we look at the half-day chart. Not much going on in the morning, popped up in the afternoon. So we'll continue to watch, see what there is to see, and learn over the course of this next week. Continue to look for your biggest opportunity is potentially that 2-day recross if and when it occurs. We go from the S&P 500 to the NASDAQ 100. Look at that huge up candle. Big green up candle with a wick on top. Price percent oscillator stroking up. Derivative oscillator gaining momentum after going down for 4 weeks. So that's interesting. We go to the 2-day chart. Y'all remember the 2-day crossover going up. Jumping in point somewhere around 257.05. The high 264.23, so about $9 or so. That's not bad. Not bad at all. That is a 2-day recross. Now again, it's not our favorite. Our favorite way is, of course, the weekly vertical crossover, but a 2-day recross is not a bad thing. We look at the half-day chart. We see it up in the morning, further up in the afternoon, reaching a higher high. And that is nice to see. Price percent oscillator heading up, little more than flat, we would say. And derivative oscillator looks like it gained a little bit of momentum late in the day. So that's where we are as stocks go. What about bonds? Well, bonds are down 0.5%, about 0.5% for the day. Look at the candle that we have here. Not a healthy candle. Candle with a wick on the bottom about the same width as the green open box candle, and then a wick on top that's maybe 2.5, 3 times the width of the candle. So again, we call that a spinning top. It means indecision on the upside, but again, that tail on the bottom and that long tail on the top, not necessarily a good sign that things are straight with bonds. Price percent oscillator is negative and flat. Derivative oscillator losing downward momentum. So that's quite interesting. And again, we're still in a confirmed down move, but things have been tracking up for a while, but not enough momentum to pull things over. So that's showing us indecision there. 2-day chart, it crossed over going up all the way back on the 2-day candle ending Friday the 26th of June. Then it sort of slid sideways and down for 6 days, and then we see it up for 4 days. Price percent oscillator still positive, pulling away from the red signal line. Derivative oscillator, these last 2 days, gaining upward momentum. So again, don't have a trade here because of the schizophrenia between the 2-day and the weekly. Remember, they both have to be moving in the same direction. And what do we see on the 4-hour chart? Well, popped up in the morning, pulled back in the afternoon. As far as our Heikin Ashi candlesticks go, price percent oscillator, a little more than flat, just barely. Derivative oscillator losing momentum. So we got to see what's going to sort out. Weekly is down, 2-day is up. We were hoping for a crossover going down earlier, but that doesn't seem to be the case. So we're just in limbo. We're not doing anything right now on TLT 20-year bonds, waiting for that to sort itself out. What about gold? Gold down a little bit for the day, 0.25%, but we ended the week up on gold as far as the candlestick goes. Nice green open box candlestick, no wick on the bottom, a wick about half the width of the candle itself on top. Price percent oscillator pulling away from the red signal line. Derivative oscillator gaining upward momentum. Completed our second week with up movement after the weekly vertical crossover going up. We go to the 2-day chart. We can see the big movement was on Tuesday, Wednesday. We have a green up candle, but not reaching a higher high on the Thursday, Friday. Price percent oscillator is about flat. Derivative oscillator actually losing some momentum. So pay attention to see what gold does over the course of this next week with that 2-day chart weakening. That is something for you to pay close attention to. Now, price is above the 2-day trend line, well above the weekly. It's right there on the 4-hour, or the half-day rather. That's on the 2-day chart. On the 4-hour chart, it's passing through. It struggled to stay above in the morning and then crossed over going down and is just above the 2-day trend line on this 4-hour chart. We saw that price percent oscillator on the half-day crossover in the morning. Derivative oscillator went way negative in the afternoon. So keep your eye on gold if you're in that up move on it and have kept in that trade. Folks, that's where we are as we end the day on Friday with our 4 major charts. Still got 3 more to go through for you. Bitcoin, real estate, and oil. And you're going to like what oil did for us. It did what it's supposed to do. We'll get to that in just a minute. Thanks again. If you're leaving us now, have a great weekend. God bless. Be sure over the course of this next week, if you find trades, to use your trade worksheet. That PDF is in the show notes for you to practice trade with. You'll find that trade worksheet the most valuable thing you can use. Next, the daily market worksheet and the trade and the weekly market worksheet, which is what you fill out as you listen to this comprehensive review and forecast that we record for you on Fridays for Monday. Now, we're going to keep moving through. What's Bitcoin doing? Down for the day, 1.79%. How do we end the week? Well, with a lot of indecision. Price percent oscillator heading down, derivative oscillator losing upward momentum. Look at that 2-day chart. It's still negative. Price percent oscillator going down. Derivative oscillator losing some downward momentum, but ended this 2-day candle on Friday. Red spinning top, indecision tending down. We're just not getting any strong movement, any strong will for Bitcoin to keep going up. So again, that's just not happening at this point. And that weekly chart is weakening. 2-day has already gone negative. So what we're still hoping for is a lot of strength. The 2-day chart to rotate over going up, giving you a 2-day recross to jump into Bitcoin. If that happens, great. We'll look for a trade there. If it doesn't, then we won't. Remember, we trend follow. We don't tell the charts what to do. You never can. They tell you what to do. Lastly, on the half-day chart, we see that down movement for the 1.79% down. Our biggest downer for the day was Bitcoin down in the morning, followed by more down movement in the afternoon. Not enough energy to cross over going down, but again, that may happen on Monday. We'll keep our eye on the prize. Next, we go to real estate. And we start off on the weekly chart. Remember, it crossed over going up back on the week ending the 29th of May, up for 3 weeks, and then sort of sideways since then. Ended the week with a green spinning top, indecision, tending up. Price percent oscillator edging up ever so slightly. Derivative oscillator losing upward momentum. 2-day chart. 4 days now of down movement. It was an up day on Friday, but the 2-day candle, which is what these represent, is down. We see solid red down candles, price percent oscillator heading down, derivative oscillator losing a little bit of downward momentum still. We go to the half-day chart. That's where we see the up movement after 1, 2, 3.5 days of down movement. We did see things try to level off throughout the day. Again, 0.31% is all there is. Price percent oscillator about flat. Derivative oscillator losing downward momentum. What do you take from real estate? Well, we are just waiting to see if that 2-day is going to ever recross going back up, or if it's going to stay weak enough to eventually pull the weekly chart over with a weekly vertical crossover going down so you can practice short real estate. We'll wait and see. Again, the charts tell us everything. Lastly, we go to black gold. That is oil. Remember the weekly vertical crossover we had at the end of this last week? Jumping in point somewhere around the 28.31 mark or so. And where have we ended up this week? What was the high? The high was 29.29. We ended the week at 28.83. So again, things moving in the right direction. We look at USO. It was up 2.18% for the day. That's nice to see. That price percent oscillator ever so slightly pulling away from the red signal line. A green up candle. That's nice to see. It's not a big candle in the scheme of things. And again, I don't like this chart a lot. We've talked about how sloppy it has been for about a year before the crash. But since we had that crossover, we've stuck with it just to see, so that those of you interested in oil could potentially find a practice trade in it. 2-day chart, we see that the last 2 days have been lots of indecision, lots of downward pressure on the charts. Red open box candle, again, after 6 days of nice up movement. And then we go to the half-day chart. That shows us where we had the big down day on Thursday, and then trying to recover some on Friday, like we set up 2.18%. Still haven't had it crossover going up. Maybe it will on Monday on that 4-hour chart, make us feel a little more comfortable. That's where we are, folks, with our charts as we end the week. Accelerated Market Mastery students, your training, I was working on it today. It will go out to you Sunday evening. So excited to have you in the course. And of course, for everyone else, if you don't have our book, follow the link in the show notes and body. If you happen to live overseas and want to get it, you need to email us, cw@chartingwealth.com. I'll send you a PayPal invoice. For some reason, Square will not allow foreign credit cards to clear, but our PayPal account will. cw@chartingwealth.com. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.